What's up, you guys? Welcome back to WIDEBODY Nation. Today we are talking Gap. And I'm not talking about those Mopar boys out there, Gap and Mustangs. I'm not talking about Stance Nation with their just so tight gap between the tires and the fenders. We're talking guaranteed asset protection. Now, after you guys watch this video, if you want more on this topic, go check out Your Auto Advocate. They have a good video on this as well. I do enjoy their channel for the dealership perspective. This gentleman right here worked as in a dealership for years and years. I think it's over 20 years, and his son is the bright-eyed, bushy-tail guy asking all the questions, which we do appreciate. So with that being said, what is Gap? We will address that in the video. 2, how much should you pay for Gap on your new, used, or lease? And then 3, we'll answer the last few questions. Can you cancel it? Are there any other benefits? How do I file a claim? We'll figure that out at the end, right? That's a little bit less important because we want to know if we should get it or not, right? So let's get into what is Gap first and how it's protecting us, because it is kind of an insurance product, right? Kind of pay for it up front and then you reap the benefits maybe on the back end. Hopefully not, but honestly with this one, it's kind of a no-brainer in my book for many people. So with that being said, let's go over a situation where you would sure as heck want to have Gap insurance, guaranteed asset protection insurance. So let's say that in 2018, for instance, 2018, my Dodge Charger Daytona downstairs, right? Let's pretend that we don't know anything about that car, right? Say in 2018, I bought the car for 35 grand, sticker price, right? No incentives, no nothing like that. Bought it for 35 grand. Let's say now it is only worth 22 grand actual cash value, factoring in the mileage, the condition of the car, current market value, because insurance companies, 9 out of 10 insurance companies are using some sort of formulation that is basically what is kind of the actual cash value. It usually is over wholesale, but it's not like some amazing Kelley Blue Book value. So with that being said, if I have that car financed for 60, 72, 84 months, chances are, even if I got it at 0% or very low rate, chances are in only 2 years, I would only have paid off, maybe it's down to 25, but probably more like 28 or 29K that I would owe on it, right? So let's say the insurance company is going to pay out 22 for the car, actual cash value, but I owe 29 on it. Basically, me getting into a wreck with that car, whether it's my fault, someone else's fault, a deer's fault, or just a freak accident fault, struck by lightning and car blows up, whatever. That is like someone coming out of nowhere and punching you in the face saying, where's my 7 grand at? And that someone is going to be the bank, whether it's, Chrysler Capital or whether it's Wells Fargo or whether it's Penn Fed Credit Union, right? Gap insurance allows you to prevent that situation that, oh crap, my car was just damaged and totaled. I need to pay the negative equity on it, right? Gap is basically negative equity insurance if you want to think about it that way. Guaranteed asset protection, think about it, negative equity insurance, right? So, now that we understand why we might want negative equity insurance or Gap insurance, should you buy it and how much should you pay for it? Well, first of all, should you buy it? Generally speaking, I go into my car deals at least entertaining the possibility for Gap. There are some other products in the finance office or other products that come on the cars, those, the spray bottle, ceramic, whatever. I'll get that done myself, right? So I usually just la 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 when that happens. I pick up my fake phone. I'm like, hey, what's up? I'll remind them about the 5,000 subscriber giveaway. I got the Apple AirPods. Yeah, they already know about it. They already know. All right, sorry. It was a C8 phone. Anyway, Gap insurance should be on your radar. Unless you are buying a car with heavy down payment, big down payment, probably, tell you what, basically all you need to do to figure out if you need Gap insurance is see if you're going to be positive or negative equity in the car throughout the life of the loan. If you're going to do a low down payment on a car, chances are you're going to get behind in the equity battle of the car. That's just simple math and facts on cars. They depreciate whether we like it or not, right? We'll have more videos on depreciation coming up. So, for instance, if you're going to go buy a Dodge Charger, go on Edmunds.com, search the true market value, and when you drive it off the lot, if it's going to depreciate 15%, if you're not putting 15, 20% down, then chances are you're going to want Gap. And that's not even factoring in if you're, rolling in the taxes, rolling in additional finance products to your loan, or you have negative equity, which is the big one. That negative equity from a previous loan, Gap insurance can really hook you up. Now, you got to be careful. Make sure Gap insurance isn't capped out. Some banks, some lenders will cap out Gap insurance at 120%, 130%, because it is kind of a technique. You could string the dots together to basically say, holy cow, I am way underwater, way negative equity in this car, and I don't have Gap on it. So that's kind of a bad situation for me. So maybe I'll go hustle up to a dealership over here, and this is just my opinion, this is hypothetical. Hustle up over here, trade into another car. Heck, we'll roll all that negative equity in, and then I'll have a $30,000 car, but I'll owe $42,000 on it, and I'll have Gap insurance. But that's like almost 150% of the vehicle's value that you're financed. So some lenders, some Gap companies will cap you out. I do not have a list for you. That's just a question you need to ask. Like when you're buying Gap, say, is it capped out at a certain percent? So a lot of my lenders, they cap it out at 150%. I just know this because I asked. Now, how much should Gap insurance cost? When I get my pre-approvals through PenFed, this is PenFed right here. PenFed's Gap insurance for new or used vehicles for a maximum loan of $100K. See, they cap their Gap out at a dollar amount, not a percentage amount. So I guess you could say it would be 150% if you did a $100K loan and $50,000. But anyway, pretty much regardless of what you go with, their Gap insurance cost is $449. I would say that's kind of a center mass, kind of an average, right? Because when you go over here to Navy Fed, another bank that I use, they sell Gap for $299 flat fee. So their Gap is a bit cheaper. Now, I do not see their limit on Gap here in this article, but it looks like they have some good talking points. You should consider Gap if your loan had a 0 or low down payment, you have a lease, but maybe it's automatically insured, because we'll talk about that in a moment. Your car make and model depreciates quickly. For instance, here on NerdWallet, we have some depreciation missiles here. I say again, missiles. 100%. Nissan Leaf 2016. Boom! Lost 50% of its value, 51% in a year. Holy cow, that's worse than this Jag right here. This Jaguar has better resale value than a Nissan Leaf. I don't know what they did in 2016 Leafs, but I used to work at a Nissan dealership. I didn't know that it was that bad. But anyway, back to Gap, right? So, another little money-saving tip on Gap, and this is not ubiquitous across the market. However, I just had this happen to me in my Corvette deal, my C8, not the white one. It's the black one now. The white one sold a long time ago, right? Basically, the lender that I went through, so Chevy beat my pre-approval rate. I came in and I told him, I said, hey, I'm approved for X.X rate with PenFed, right? It was like 3.9. I'm willing to finance through Chevy if you guys can beat it, because the dealership does make a little bit of money on there, right? So they went ahead and beat it, and they said, hey, you can have a 3.8 rate. Your rate can be 3.8, or if you buy Gap, we can lower the rate to 3.65. Now, I didn't, put the screws in so tight with the questions that I got it in writing. However, they did lower my rate from 3.8 to 3.65. So I'm not saying that is a hard, fast rule. Like if you go through PenFed, when you get Gap, I've never seen them lower your rate just because you bought Gap. Same thing with Navy Fed. Although if you guys have seen that, let me know in the comments. But yes, this last deal that I did, Chevy, the bank that I went through, gave me 0.15 off my rate, which, saves hundreds of dollars over time just for buying Gap. And I wanted Gap anyway, so that was a good thing. So moving forward, usually Gap is factored into your lease payment, but be sure to ask the question. And this is how we'll kind of start rolling up the video for what you guys can actually do to holster up and roll to the dealership, right? So first off, Gap can be used for a new or used car. We're speaking here. Second, you should consider Gap heavily if you're either financing negative equity in, doing a very, very small down payment, or you know that your car depreciates fast. And I would also just make the argument, if it's close, maybe err on the side of Gap, because I've only seen Gap really be between a few hundred and maybe $1,000, and it can be negotiable. So if they tell you Gap is $4,000, obviously that's fake news. But if they're saying, hey, we can do Gap for $699 and your car's, $40,000, $699 is going to let you sleep at night. It's also going to let you drive down the road, because it's not. I'm trying to help you guys out because there's so many other crazy things out there. It's not even crazy people. It's not even crazy animals. It's everything. You guys, it's 2020. We know this. We know this. So personally, I always entertain Gap in my deals. I don't go to the finance manager or the salespeople and say, hey, I'm definitely going to get Gap. Like, just throw that on the tab right now, because they're going to throw it on at full price. Or maybe they'll even turn the dial up on it. Maybe it was going to be $4.99. Now it's $9.99, right? I'm not throwing shade on you dealers. I'm just saying, just gotta be careful here. So, you guys know when to consider Gap, new or used. You know to ask about it once you get to the finance office. Just have them give you the pitch, right? See if they'll take your rate down. See if they'll bump the cost of it down. And see how much it covers of your loan. Because if your Gap's only going to cover 10% over, 20% over, that's not really going to help you out that much. I mean, it will. That's better than nothing. But, 150%, that's a lot better than 110 or 120% of the actual cash value of the vehicle, right? Okay, so can you cancel Gap? Sometimes. It's all about what the contract says. And this goes for extended warranties and stuff too, but we got videos on videos coming out about that. So when you guys do any contract, no matter what it is, homes, cars, bedding, I don't know. You got to read the fine print, right? If the Gap says it's not cancelable, then it's probably not cancelable. But if it says you can cancel it for a prorated refund, sometimes, you could say you have a 72-month loan, right? You cancel it halfway through, maybe you can get half your money back. It's called prorating. Again, another whole video on that, but just check the fine print. I would not say Gap being cancelable is a deal breaker, though, in my opinion. I am very pro Gap for most deals. If there's even a question in my mind, I usually opt for it just because of the way vehicles are, And the insurance company, I've never worked for one, but you could pretty much figure that they're going to probably try to give you the lowest amount possible for your car. So that's why I really like Gap, because the Gap is from the bank. The bank and other lending institutions are trying to allow us to protect ourselves, basically from a bang insurance company pays out and then we got to cough money up to the bank. It's better for us to be able to pay the bank with this insurance money and the Gap insurance money than it is for us to potentially default on a loan or go into some sort of crappy payment plan. Because, guaranteed money is better than maybe money. Lastly, don't forget to subscribe. But anyway, what are some options that we can do other than Gap? So some insurance companies everyone brands it a little differently. They call it new car replacement insurance or new car replacement assistance. There's a list. I'm on NerdWallet right now, but it's got a list right here. I know USAA also offers a similar product. I think they call it like car replacement assistance or something. But basically, some insurance companies, when your car is relatively new, they will let you add some sort of added product, just like you can add roadside assistance, just like you can add, rental car you can add little, modifiers to your policy for, a couple extra bucks, maybe 20 bucks. I don't know. Everyone's insurance needs are different, right? But some insurance companies offer this. Personally, having had I used to have USAA, and they used to offer the new car replacement assistance, but it was only an extra 20%, right? So, for instance, me having Gap that covers up to 150% instead of just USAA that covers 120%, I would pick the Gap, especially because the Gap is usually pretty cheap. I mean, if it's under $1,000, you're only looking at single digits or maybe 10, 15 bucks on your monthly payment, 20 bucks max if you're doing a real short financing term. So personally, in my opinion, I usually tend towards the Gap, especially, I mean, like PenFed. If you guys haven't opened a PenFed account, I would recommend it personally, just because it always helps to have a credit union where you can just go grab a pre-approval and then run into the dealership and be like, bam, pre-approved for 2.9%. What can you do? And then they have, that's a line in the sand they have to work from, right? So even if you're not buying a car right now, I would go open the account, because the longer you have accounts open with people, the more likely you are to get approved, first of all. So getting approved, first battle. Second, getting a better rate, right? Alrighty. I believe that covers it for Gap. If you guys still have questions about Gap insurance, what I like to call negative equity insurance, go ahead, put it in the comments below. If you guys have comments on the formatting of the video, on either brevity, or if I'm not specific enough, then go ahead and leave that below as well. Remember, we are doing our 1,000 subscriber giveaway, and by 1,000 I mean 5,000, because we are already past 1,000. 5,000 subscribers giving away Apple AirPods Pro. Just hit the subscribe button, automatically enters you to win. We do the giveaways on the live streams. You can also join us for our live streams that we do every Sunday. As of right now, we do every Sunday. Car buying Q&A. We chat it up. We talk a lot of Mopar. We talk a lot of wide body action. We talk financing. We talk money. Talk a little bit of stocks, credit cards. A little bit of everything. Usually go for about 60 to 90 minutes. Depends on how lit up the chat is. So you guys make it, and I just put it on for you. So appreciate you tuning in. If you guys haven't signed up for Webull, tonight is your last night to get the 4 free stocks. Stock trading app Webull. I use it on my phone. Pull it up right here for y'all, just so you know that it is legit. This is Webull on my phone. I prefer it because it has the before and after hours trading that a lot of products do not. Appreciate you tuning in. Stay safe out there. Check your tires. It's winter. I don't know. I'm just on a tire kick right now. I'm researching tires like crazy. That's it for the video. I have another one coming out for you guys very soon. See you next time.